more with Kush Mehra, who's a Chief Business Officer at Pine Labs. I'm also going to be in conversation with Jitendra Gupta, the founder and CEO of Jupiter. He's been one of the pioneers when it comes to fintech. This is, of course, the second venture that Jitendra is attempting. I'll begin with you, Jitendra. We always say there's a catch. If it sounds too good to be true, it probably is. Is the free lunch soon going to be over when it comes to buy now, pay later? Is that the sense that you're getting with the kind of commentary that we're getting, whether it is from the Reserve Bank of India or the Niti Aayog at the center?
Thanks, Nayantara. So I think if you look at it, the buy now pay later concept is nothing but the consumer has option to pay it later while they are availing the goods and services today. Now, what that means is there is somebody which is a lender or a bank or a fintech financing that purchase. Now, that purchase could be subject to interest rate being charged to the consumer, and sometimes the OEM, which is like the goods which you're buying, those brands subvent those purchases. I don't think so in any scenario Reserve Bank is trying to regulate that part. I think what they are trying to regulate here very clearly is that any entity who is providing that financing facility should be under the supervision of RBI. And I think that is the clear ask in the working committee paper, which has come out this week. So it's too premature to say, in my view, that the Reserve Bank is against buy now, pay later kind of programs.
Okay, so you're saying the Reserve Bank of India is not against buy now, pay later, maybe just seeking more transparency or regulation. Kush Mehra, Pine Labs, you come in. What is your assessment? We've seen Pine, of course, betting big on BNPL as well in recent times, is being seen as a big lever of growth. You work very closely with the merchants as well.
Yeah, so I think I tend to agree with what Jiten just mentioned. I feel it is more around defining a framework which hasn't existed, and also over the last few years you've seen a ton of NBFCs who have come into this space. Look, you have to look at it from a perspective of how large is the market and how much has it been served. So when you look at the what you call it, like the credit eligible base of customers in our country, I would say that this is somewhere in the range of about 220 to 250 million credit eligible customers. When I say credit eligible customers, all their financial records are in place. Their CIBIL checks, their CIBIL scores are available. But then when you look at how many of them have actually been handed out, let's say a credit card, I would say that it's not anywhere more than like a 40 or 50 million card base that you see in the country. So still, I feel that this segment is hugely underserved. You would also see that traditional lenders, which are mostly banks, they don't really go out and lend, credit to first time to credit customers, right? So there is a ton of information, records, data, financials available. So I feel that it is going to firstly not in any fashion slow down the growth of buy now pay later. I would say the aspiration of an average Indian, the lure of going and spending and indulging is very, very high in our country. And I've seen that over the last few years, actually we've seen that the growth in the buy now pay later segment of an average ticket size of 10,000 rupees and lower has actually boomed the most. I mean, I would say that we've seen like a 3x growth of customers going out there, not only buying a consumer electronic product, but also going and actually buying the favorite pair of sunglasses and paying using buy now pay later. Their cards, their credit, which they've been pre-approved for, are in the formal system and have gone through a rigorous process. I would definitely say some framework would help. I think it would, like I was saying, it would design in a way an outline on how new age lenders should come in and what checks and balances should they have in place. So I'm saying it's a nice leveler, brings a balance, but in no way will it slow down the growth. I'm very bullish and excited.
Simple question: while buy now, pay later empowers more users to consume more, But what are the initial trends indicating on the recovery side? Everybody's focusing on the lending balance sheet. P guys are focusing on it. Everybody is trying to understand the lending side. But my simple question is that right now things are looking good. Economy is in an upturn. Wealth effect is getting created. Jobs are getting created. Buy now, pay later. It's an enticing thing. But are there any patterns which are visible about the recovery trends?
So, if I have to answer this, I would say yes. This is one of the thing which is what Reserve Bank is trying to regulate. So, what is happening is the primary concerns what RBI Working Committee Group highlighted, that one, these financing is not being reported to bureaus in most cases because they are very small, and done by fintechs. Second, the interest rates, when the consumer is being told interest rate, they are not being disclosed in transparent manner. What exactly is the interest rate here? They are being told ad hoc fees and structures, and I think that is another key issue. And third is, since these loans are not being reported, the recovery mechanism are outside of most time. I'm not saying in all cases. Most times are outside of the formal recovery code of conduct, which is defined by Reserve Bank. And I think that is the big issue, honestly, rather than saying that the buy now pay later as a program is an issue. That's not an issue. The issue is how the practices around these programs in terms of reporting to bureaus, interest rates, and the recovery methods. I think these are the things which need to be addressed. That's what Reserve Bank clearly wants.
Kush, I'm just trying to understand this entire process. If there is a default, if there is a delay, will it be reported to the credit bureau? Will CIBIL make mark of it? Because ultimately it's the CIBIL number and the fear of losing a credit score, which in a sense will always be prompting the borrower to pay back. How does this entire chain and sequence of events work with fintech lending?
When it comes to banks, I think it's a very well-oiled machinery. And I think there are all the processes and protocols in place. And I see that in that sense, they don't let up on anything, when it comes to, reporting for a bad loan or a credit card, especially credit card defaults, right? Definitely, I think you made a good point. The same kind of, I would say the same kind of practice and hygiene needs to come in into the fintech space as well. Because look, at the end of the day, you're also chasing growth, right? So at the end of the day, you pay a small price. And I'm saying, when as a fintech, as a newcomer NBFC, you come into the buy now pay later space, you want to grow very fast, right? And there could still be some rough edges along the way, that you need to smoothen out. I feel that one of those definitely is going to be in terms of, like you rightly asked, that what is the recovery mechanism, what is the reporting mechanism. I think Jiten also alluded to that. I feel once you're able to, and I feel to a large extent the RBI steps that have been kind of started off, which have been kicked off, I think are exactly in the right direction, right? Because it would actually address a lot of areas around how should a new age fintech buy now pay later company, which is running consumer credit on the backs of I would say high quality technology, also follows the right practices, which were, by the way, laid out for many years by traditional financial institutions. So definitely, I think this needs to come in. This would positively impact both consumers, merchants, and obviously the lenders, as a whole.
Jitin, that's the thing, right? Well, everyone knows that buy now, pay later is the future. We've already seen how globally the model has worked. But here in India, the question is not about revenue generation. It's about profitability over the longer haul, which seems a bit challenging as of now, at least.
Yeah, that's true. So I think today the smaller buy now pay later programs are being addressed in two ways. But as Kush said, that banks are addressing it properly by following all the procedural guidelines, with respect to KYC, with respect to interest rates and proper information to the customers. I think it's being, and I would be admitting it honestly, but there have been few fintechs which have been misusing this, and misusing this in terms of either they are making these programs free for the consumers altogether, in hope of that they will be able to give more loans to the consumers, so the consumers get over leveraged by through these kind of methods. Or there are other extreme of fintechs who kind of charge hidden fee on these programs without telling the actual interest rate. And if you calculate the actual interest rates, they come out to be 60-70%, which is like the same situation what we saw in microfinance era in 2008 2009. So uh, so I think these are the two key issues what needs to be clearly addressed, and that's why RBI clearly wants that every